Welcome to a comprehensive summary of The Psychology of Money, Timeless Lessons on Wealth, Greed and Happiness by Morgan Housel. This book is not just about money, it's about understanding the deeper psychological forces that drive our financial behaviors. Whether you're a seasoned investor or just starting your financial journey, Housel's insights offer profound lessons on how to think about money, manage it wisely, and avoid common pitfalls. In this video, we'll explore the key themes and ideas from the book, breaking down the psychology behind money and how it impacts our lives. Housel begins by discussing the often overlooked roles of luck and risk in financial success and failure. He argues that while we like to believe hard work and intelligence are the keys to success, luck often plays a significant role. Likewise, failure can sometimes be the result of bad luck rather than poor decisions. Housel uses the example of Bill Gates, who had the luck of being one of the few people in the world with access to a computer in high school. But on the flip side, there were other equally smart individuals who didn't have that same opportunity. The takeaway: it's important to recognize the role of luck and risk in financial outcomes. This helps us stay humble when we succeed and maintain perspective when things don't go as planned. Our personal experiences heavily influence how we perceive and handle money. Housel argues that our financial decisions are not just based on what we know intellectually, but on the experiences we've lived through. For instance, someone who grew up during a time of economic prosperity will have a different outlook on money than someone who lived through a recession. These experiences shape our risk tolerance, our approach to saving, and our investment strategies. No two people have the same financial journey, and that's why there's no universal approach to managing money. One of the most powerful concepts in finance is compounding, yet it's often misunderstood or underestimated. Housel emphasizes that compounding is not just about earning interest on your interest, it's about patience and time. He shares the story of Warren Buffett, who started investing at the age of 10. The key to Buffett's wealth is not just his investment acumen, but the fact that he has been investing for over 70 years. The longer you let your investments grow, the more powerful compounding becomes, but this requires patience, a trait that many people struggle with, especially in a world focused on instant gratification. Housel makes an important distinction between being wealthy and being rich. Richness is often about the visible markers of success: luxury cars, big houses, expensive vacations. But wealth is the money you don't see, the savings and investments that provide security, freedom, and options. Wealth is about having the financial resources to live life on your own terms. It's the ability to say no to things that don't align with your values because you have the financial freedom to do so. Understanding this distinction helps us focus on building wealth rather than just looking rich. Living below your means and maintaining flexibility in your financial life is crucial for long-term success. Housel explains that frugality is not about being cheap, it's about giving yourself options. When you live modestly and save more, you have the flexibility to handle life's uncertainties. Whether it's an unexpected job loss or a sudden medical expense, having a financial cushion allows you to navigate these challenges without stress. It also gives you the freedom to take advantage of opportunities that others might miss out on because they're living paycheck to paycheck. Money can be incredibly seductive, often leading people to make irrational decisions driven by emotions like greed, fear, and envy. Housel argues that understanding these emotional triggers is key to making better financial decisions. For example, during a market boom, it's easy to get swept up in the excitement and take on more risk than you can handle. Conversely, in a downturn, fear can lead you to sell off investments at a loss. Recognizing these emotional responses can help you stay grounded and avoid making impulsive decisions that could hurt your financial future. A central theme in the psychology of money is the importance of maintaining a long-term perspective. Housel emphasizes that investing is not about getting rich quickly, it's about staying in the game for the long haul. Successful investors understand that markets are volatile in the short term, but tend to grow over the long term. By focusing on the long term and resisting the urge to react to short-term market movements, you can build wealth steadily over time. This approach also involves understanding the importance of survival. It's not about hitting a home run with every investment, but about avoiding catastrophic losses that could knock you out of the game entirely. Ego is one of the biggest obstacles to making sound financial decisions. Housel explains that our egos can lead us to take on too much risk, refuse to admit mistakes, or make decisions based on pride rather than logic. For example, someone might hold on to a losing investment because they don't want to admit they were wrong, or they might take on too much debt to fund a lifestyle that's more about impressing others than fulfilling their own needs. To make better financial decisions, it's important to keep your ego in check and focus on what really matters. Our brains are wired with cognitive biases that can lead us astray in our financial decisions. Housel discusses how biases like overconfidence, confirmation bias, and the Dunning-Kruger effect can cause us to make irrational choices. For instance, overconfidence might lead us to underestimate the risks of an investment, while confirmation bias might cause us to seek out information that only supports our existing beliefs. By becoming aware of these biases, we can work to mitigate their effects and make more rational, informed decisions. Finally, Housel explores the complex relationship between money and happiness. While money can provide comfort and reduce stress, it doesn't necessarily lead to lasting happiness. Housel argues that the key to happiness lies in the freedom that money can provide. The freedom to control your time, pursue your passions, and spend time with loved ones. It's not about accumulating as much wealth as possible, but about using money as a tool to build the life you truly want. The psychology of money is a profound exploration of the human side of finance. It's not just about building wealth, but about understanding the deeper forces that drive our financial behaviors. Housel's insights challenge us to think differently about money, helping us make better decisions, avoid common pitfalls, and ultimately live a more fulfilled life. If you enjoyed this summary and want to dive deeper into these lessons, consider picking up a copy of The Psychology of Money. Each chapter is packed with wisdom that can transform the way you approach money and life. Thanks for watching. Don't forget to like, subscribe, and hit the notification bell for more insightful content like this. What was your biggest takeaway from this video? Let us know in the comments below. See you next time.